Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and this week I'm joined by Zacks stock strategist and the editor of the Counterstrike newsletter here at Zacks, Jeremy Mullen, to discuss the Fibonacci levels once again. Now, you may recall Jeremy was on a couple of months ago to discuss how to use the Fibonacci charts when you're trading stocks. And this time we're going to bypass all of that and just take a look at what these charts are showing. And as you know, many of these stocks have been hitting new highs. The indexes have been hitting new highs as well recently here in May of 2024. So we wanted to take a look even, more importantly right now at what are those upper levels, but they're all seemingly hitting them. But what is the lower levels looking like? So if you're on the sidelines, you're waiting for a pullback, and you're wondering, when should I maybe target the pullback price, then this is the podcast for you. And as you know, we're doing this as a video podcast, but also our normal audio podcast. So on these ones with a lot of charts, it is very helpful to actually visually see those to see the charts. So take a look at the video podcast. It's available on YouTube. Just go to zacks.com/YouTube to find it over there. And as always, welcome, Jeremy.
Hey, thanks for having me. Excited to go over the Fib levels again.
Yeah, you're our expert on the Fibonacci's, and I've been wondering, what's happening with them. We're going to talk about the major indexes, but we're also going to focus on 5 red hot stocks. Many of them, I'm assuming, are hitting the Fib levels, but I did want to know what happens when we do get that pullback, which is inevitable. We always get stock pullbacks, and what areas maybe should I be looking at if I'm interested in adding or starting a position in some of these red hot stocks. So that's why I brought you on today.
Yeah. I think, it's good to know these levels. I say Fibonacci's are like a map, like a guide, and they don't always work all the time, but these levels really give you support and they give you targets to maybe sell into. And it's just nice to know where they are. So I think it's a really healthy thing to go over. And I think we should start with the index, start with the S&P 500.
Okay.
So if we look at the chart
right here,
hitting
new highs.
Yeah, I have the chart up of right now of the SPX, and for anybody who's followed Counterstrike, and I know I've talked about this in our brainstorm meetings, I've had this chart up for basically since the COVID highs. It's drawn from the 2020 lows in April, about 2200 to the 4800 highs just at the beginning of 2022. So as soon as we started pulling back, I am looking for, okay, where are we going to go? Is there a Fib level below? And if you look at the chart, we had a 50% retracement. This is called the halfway back. This old Chicago floor trading term, right at 3,500. Now, when we were hitting this, I was nervous we'd come all the way down here. So it's like, this isn't really like a science, okay? This is like an art. So you really have to be flexible and look for these levels to hold before you get in there. But yeah, 3,500 held. And what I do is I target when these pullbacks, when these retracements hit, I target the negative 23.6 level, which, as you can see on the chart, is 54.40. We are almost there. So for me, I'm very hesitant because this has been a 2 to 4 year kind of setup in the works. I'm very hesitant to be long into this target because the odds are we pull back over the next 100 S&P handles that we're coming into. So from there, what I would do is I would want to look for, where are we going to pull back to? So I want to zoom in here. We'll look at the daily chart. And let's just say we get up into this level. So I'm going to draw this previous low. And for you guys listening out there, this is going to be hard to see, but I'm going to go from 4,100 to 5,400. Look where this halfway back is, right? It's right under the 4,800 level, lined up with this 200-day moving average. So I get kind of interested when this is kind of all lining up. And I'm not saying we're going to fall quickly down to this level, but this is something I'm seeing. And the reason I would be cautious is because we're hitting this long-term target. We're falling. And then what I'm looking at is where the possible pullback spot could be is around where currently the 200-day moving average is. So very interesting. I would say 4,800 is the spot where I get very interested again. And then looking at like the NASDAQ, that lined up pretty well too. So we're going to zoom back out into that the weekly, and you can see if you look at this. Let me zoom out a little more here. You can see COVID lows to the highs. So it's COVID lows right around the 7,000 area to the highs 16,700. We actually tested the 61.8 almost 3 times there, right? So it was a little hard to get long in here because it's so volatile in the late 2022, like the Q4 late in 2022, just up and down. But we held, and of course we are bouncing into that negative 23.6 target that I've had up here for 2 years. So pretty amazing we're here, because when we were down, around 11,000, it's like, this is my targets. I don't know how we're going to get there, but it's on my map. So here we are. So we're going to pull back into these targets.
Yeah, I feel like the NASDAQ is the one that most people consider to be kind of bubblicious.
Yeah, it is. I mean,
just because
look what Nvidia is doing today. It's got last look 75 points. That's kind of bubblicious, sure. This can keep going, of course. So another way to look at this, let's zoom in on the NASDAQ. There's all my old targets. So what I showed you were the pullbacks into retracements, but we can target extensions too. So if I go to that previous high set back in March and draw down to the lows that we saw back in April, what happened was we got above the 61.8 level. And I was actually looking for the market to pull back here, but it kept going, right? We broke the 50-day moving average. And what you start to target is these extensions, okay? So it's a 161.8. And if it gets really carried away, 261.8, and I got the greedy man target up here of 423.6, which is, I wouldn't expect that anytime soon. But, the NASDAQ, if we get to my targets from COVID, I'm going to be like, okay, now let's see if we pull back. If not, I'm going to look for 19, almost 700 there.
Wow. So how would I know if I'm like a newbie trader, but I'm using these levels? When it gets up to that, your high there, your COVID high, basically, how do I know that it's busting out of there and it's, going to continue to go higher? How long does it have to stay above that level for you to start believing like, hey, this is real?
Yeah, there usually is no time frame that you wait for. It's basically just looking for a confirmation. So if it gets to that level and you see programs aggressively start selling that level, I'm thinking, whoa, somebody's seeing the same thing I am. So it was kind of like when NASDAQ was at lows, we kept on bouncing off that 11,000 area. And I was like, there's buying here at this macro Fibonacci support I have. I want to kind of be interested in this. I'm going to look for long-term, longs here in the NASDAQ in tech stocks, because this looks like potential for a big move down the road. I didn't know AI was coming. I didn't know that, we could have this move this quickly. I was thinking this is a 3 to 5 year setup, not a 1 to 2 year setup. But here we are. The move happened a lot quicker than most people could imagine. So as far as like a newbie, I started doing this after the financial crisis. The market kind of dried up. It got boring. So I was looking for ways to just open my eyes to new entry points, new levels, new ways to make money, essentially. And I discovered the Fibonacci levels, and I started drawing on my chart, drawing retracements, drawing extensions. And I'm like, whoa, this stuff works more than it doesn't. I have to pay attention. At the very least, I need to know where these levels are so it can help me make decisions.
Yeah, for sure. Okay, what about the small caps? They've really kind of lagged. And I'm wondering, have they retraced back to your Fibonacci levels for the COVID, or are we still way off?
Yeah, very similar chart. But we had not had that bounce. Like you said, they lagged. So we had the COVID lows down here. And this is the IWM, of course. This is the ETF for the small caps. We had the COVID lows, March to highs in late 2022. And then the halfway point was seeing a lot of buying until we had the selling in late in 2024. We actually made new lows. Okay. That was kind of like a fake out, right? It was like a stop run below those lows, and we snapped right back. And now we're kind of struggling again, right? We're going sideways. However, looking long term, this is a great setup. We had those lows to highs. I've been looking for this 278. When's it going to break out? I don't know. I think if you look at the fundamental side, it has to be when we actually see the interest rates come down, and that's like it's happening. And then we can have a full commitment to the small caps. From the technical perspective, we have this big setup in place, but it's like, where are my entry points? How am I going to get into this if we have it? Now, for Counter-Strike, we kind of recognize this. I've been sitting in IWM from the low 170s. It's been a painful back and forth since, because we're just waiting for it to go up. If you zoom in, I can kind of show you how like a shorter term kind of trade works out. So let me just kind of delete this so I can draw it for you. From the highs back in early April at 212, I'm drawing down to the lows, which is right around 191. Okay. And as soon as this 61.8% resistance breaks, I start looking for that extension, which is around 224. So Counter-Strike, we're shorter term. I'm not looking for that 275. Maybe that comes in a year or two. I'm looking for this 224 possibly in the end of the year, when that rate situation actually starts happening. And then, if you're looking for these extensions, you can kind of see that greedy man one kind of lines up with my macro. So I think there's a lot of promise in this IWM. It's just, can you sit through this short-term volatility? They're volatile stocks. They're small stocks. If you can find the right entry point, you can probably win with this one once that interest rate story turns. But yeah, it's hard looking at this chart not to be bullish. Under those April lows, I'd start to get a little nervous that this is just not going to play out.
Okay. That's good to know. Okay, so let's move on to some individual stock names. Now, we talked about this before we went on the podcast, these 5 stocks that we picked, mainly because they are red hot. A lot of them, I'm assuming, are trading, near their Fibonacci highs or whatnot. But a lot of people are wondering, when can I get in these? Where does it need to pull back to? And so let's start off with Costco. Because that's kind of not been talked about a lot, but it's near its all-time highs. It does report earnings this week, the week of May 27th. So we're going to get some more info on them on the fundamental side. But what is this chart looking like?
I mean, it looks great. It just keeps marching on. It's a 45-degree angle, right? It's hard to be bearish this one. But if you draw those previous highs in March, if you draw a fib from those highs to the lows that it made later that month, you had this 61.8 potential resistance at around 750. Well, that broke. And if we're looking at extensions, we have around 845. So earnings, easily, we could get good earnings and that level is filled. So I would be willing to bet that that's what's going to happen. If we have some blowout, perhaps there's some higher levels in the cards. I don't know. Let's say that we get good earnings and it prints up here. We open up at 840 and they sell off. That tells me, they're selling this level, this extension that I had drawn up here. And perhaps we fill a gap and we go down testing some moving average or something. So then I want to come here and look at the prior low that was set in way back in October. Like, we haven't retraced since October, right? Like, I can't find a halfway back. I can't find anything. There's hardly any retracement. There's the only one pullback was this, the earnings back in March, where it just tested the 50-day and off the highs, and it came right back, right? Came back right back the next month. So let's just say we go that 850 mark or 845 mark, which was our target. So I'm going to draw just up there, have an imaginary kind of move here. So then if we did pull back, like the scenario I talked about, crack the 50-day, I'm looking for 650 to 685. Conveniently, we have the 200-day moving average in that area. But that would be the spot where I'd be kind of interested. Now, if the market's coming straight down for whatever reason, I don't want to buy because my line's there. But what I'm going to be doing is I'm going to be looking for that 650 to 685 buy zone is what I call it, to maybe start nibbling. And if I get confirmation, adding for further targets, which remember there's no time frame on this, which would be up at that 922 area, which is the negative 23% level. So kind of gives you an idea of what I look for if these stocks start to pull back. I really want to be chasing it, much like the same reason I want to be chasing the S&P is because we're coming into kind of these extension levels.
Yeah. Okay. Another red hot stock, Chipotle, ticker CMG, that's also trading near its highs. It is about to split the stock. So some of these levels you're going to talk about will be changed once
they're going to change. Right. So we're looking at a $3,000 stock. It's 10 to 1. It's going to be 300. So when I'm talking about these levels, just chop off a zero and we'll be talking about the same thing. Yeah, I want to go back because I want to show how this has worked in the past. So I'm looking at the April 2020 lows up to these July 2021 highs, just under 2,000. Look, it came back to halfway back, and eventually we filled and kind of stalled there, right? But then a blowout quarter, we kept going. So this stock hasn't really, well, let's see. We pulled back here. Yeah, another halfway back example. But we really haven't retraced since here in October. The October lows, which is right around, what was that, 1,800. And so the stock, I mean, geez, it's almost doubled. We are, yeah, so we're pulling back off those 3260 highs, or after the split, it'd be 326, right? So let's say we're going to get it split. Do you know when it's splitting here in the next couple of weeks?
I don't know. It's coming up.
It's got to come up soon, yeah. So we'll come down into the, perhaps I'd be interested 233 to 251 area. That'd be my buy zone. So you can see the 61.8 pre-split is 2,338 is what I have. So that's what I would be looking for. If we go to the daily chart, we can check out the moving average. Look at that, conveniently lined up. So when I kind of see those lined up, it really gets me excited for the potential, not only the potential of a pullback, so I don't want to be long here, but the potential for it to pull back so I can buy it, right? That is where I'm licking my chops and really wanting to get long. Now, that's a big move. So you'd have to have probably a potential market sell-off with that as well. So longer term, if you can get down there in the, let's say, 250 post-split, we're looking at an eventual move back up to 360 is what you'd be looking for. And that could be over a course of a year. Like I said, there's no time frame on this. It's just stocks take time, and you take time to sell off because of market conditions, and then a couple bad earnings, and they have good earnings, and we're back up to all-time highs.
Right. Let's cover Nvidia. We've mentioned it. It's on everybody's, lips these days, but it just keeps moving higher. What's my opportunity to get in if that ever retraces back?
Yeah, it's an amazing it's an amazing one. I wouldn't recommend chasing this pre-split. Probability for a big pull-in is likely, but you can kind of see the move into earnings really paid off nicely. There was a setup here I talked about in Counter-Strike, from lows to highs. We pulled right into that area, danced around. It was so 770 to 811 was the buy zone between the 61.8 and the halfway back. Danced around that area, got it back above the moving averages, and I had 1057 targets. As we went into earnings, it seemed like it was going to happen, just the way the stock was trading. Whenever a stock is creeping towards those all-time highs, especially one as hot as Nvidia, and we're going into earnings, it's generally a good sign. So it gapped up, targets are filled immediately, and I think that split really brought some new buyers in, and we're up another 100 points. So this is filled, so I'm taking it off my screen. It's been on my screen a while. Another way to look, if you're long this and you're just like, where do I get out? Or like, how high is this going? I'm going to take the highs previously made before earnings down to that low I was talking about. That was support. So then you can see there was some resistance there at the 61.8. 1,000 was that first 161.8 level. We're above that. There was no resistance there. 261.8 is 1,300. And way up at 1650 is that greedy man target that I sometimes talk about. Now, I would say that would never happen. But when you go back to Tesla, when they were going into their split and then they were added to the S&P and everything, the move was very similar to this, and it was unbelievable how those targets just filled. I was just jaw dropped. Wow. So I am going to let Nvidia do whatever it wants here. So let's say we top out the. Yeah, go ahead.
Well, I just noticed that Nvidia is the first stock so far where it wasn't off the October lows that you were drawing everything.
Right. So let's go back here. I'll zoom out. Let's look what it did in October so we can just have some perspective on that. That's a good point. So we have the October lows here, right? And it really didn't pull in as much as the others. We did have a move here, but it snapped right back. And I think it was this earnings. Okay, the earnings in November, we pulled back and then really got going. So that was kind of like the AI just kind of ramping up. But into November, we did have a setup here. So let's look. It's from these lows to highs, again, like a halfway back. And then into 530 here, or 530 was the real. So that was, yeah. I mean, it was a pretty good move, but nothing that we've seen over the last couple of weeks here.
Right. It has been incredible. What about the other incredible AI stock, Supermicro Computer, SMCI is that ticker? That one has been even more red hot, it seemed like, than Nvidia, but it seemingly has cooled off recently.
Yeah, they did an offering. So, on the fundamental side, that brings in some people who get nervous. Will they do more offerings? It brings in the bears saying, they're diluting stock. So, that has kind of stalled it. It stalled its momentum big time. And then they, I think one of the big things too is when they didn't have their preliminary guidance like they have, the stock really sold off. It rallied into earnings, but then sold off again. So let me just look at this chart from February. We're kind of in a sideways motion, but I have a great setup from the lows set, basically the lows of the year in January, to that high that it made back in March. We came in to almost this. It wasn't perfect, but I think the low is about 655. I think it made it after hours. I had 637, but right into that buy zone. And then it's rallied up to the 50-day and it's kind of playing around with that and this the 21-day, which is that green line. So we're in between 844 and 875. And the next catalyst here, I have 1450 targets on this. It's a great looking chart. I don't know how we get there. But that's what the chart has. I wouldn't be surprised though, since we are kind of, if you want to line it up with my previous charts saying we're getting close to some kind of high here, the market does pull back, that we get a double test of this 61.8, and then in the next earnings we see what happens. Can it take out these recent highs and go get those targets, or does the fib break, does the moving average, the 200-day break, and then it kind of stalls for a while? So two different ways to look at that one. I do want to go back to the just kind of see how this move happened on the chart. Let me take this one off. So the big breakout was after the July highs, right? Or was this is August highs. So I'm going to zoom in on that, on those July highs, and I'm going to draw those August highs, and I'm going to see how those extensions worked out. So let me take this guy off. All right, so we had the break of the 61.8. The 161.8 extension filled. We stalled out there. 261.8 stalled, but we filled and we stalled out there. But it kept going. 423. This is the greedy man target. There's no way I'm holding past this, right? We stalled again, but then it just continues higher. So it's kind of an unprecedented thing. Like I said, these aren't going to be the definite tops, but these are nice areas where other like programs are programmed to sell. So usually you have some stalling out, but this stock completely just took out all those levels and just kept on going. So it's been an amazing one. And so when I have those 1440 targets, I'm like, well, it can make that kind of move again. It's just, what's the catalyst to get it up there?
Right. Okay, then let's finish up with kind of an AI stock now, Alphabet, ticker GOOGL. I own it in my own personal portfolio, but it has been busting out to new highs once again. And what's happening here?
Just an amazing move over the last couple of months. This chart actually looked rough earlier in the year. When they first came out with their AI stuff, there was all kinds of complications with it. The stock was sold out, actually cracked the 200-day moving average. And then they started really get some positive momentum with their AI. So this is the long-term setup that I've had on my chart for a while. COVID lows to the highs in 2021. We came and danced with the 61.8 multiple times. It even started with cracking it here. In the buy zone, this range just held up and held up. Eventually we got going and we filled these targets. So where does it go now? Well, I can draw an extension here, and perhaps we can get up to the 193 level, right? And then you're talking about those other levels up, which are kind of for a for $1 trillion company is hard to imagine. But so I think we could see some stalling out here. Maybe there's some room higher. If you're looking for a pullback, which would be my preference, is just kind of look for a better entry in this area. You're looking at a stock that really hasn't retraced since March. So, and that was the 200-day moving average I was talking about. So let's just say those tops are in, just to give us some perspective on it. And we come down, we break like the 21-day, break the 50-day, fill this gap after earnings. And we come down into this 149 to 154 area, which would be the buy zone. Perhaps this 200-day is lined up there at the 150 area. And that would be the area I get interested in. Now you want to see that confirmation I keep talking about, like you want to see other people buying it too. But that would be the zone that I would be targeting up into the 190 area. So it's a great looking chart. Is it over? I don't know. It's really going to be determined by, is the market ready to roll over, or is there some further momentum? Because the moves so far have been very impressive.
Yeah. What's your take that these big cap, the Magnificent Sevens, are basically the only thing driving the indexes higher, other than obviously the small cap one, which we looked at earlier, that's not going higher. So what is your take on, these kinds of breakouts with Nvidia and Alphabet? These are just two that we looked at, that those are what's really driving the S&P 500 and the NASDAQ breakouts here.
Yeah, I think it's a narrative that people who want to be bearish like to spin, is that, it's only these stocks. I could go through 200 stocks that look great right now.
Right,
if we have the time.
We just did a couple other ones.
Yeah, I mean, we could. There's tons of charts. Just type it in a utility. It's really a narrative, I think, that is easy to believe because it's true. Like the weighting in the indexes is leaning towards Apple and these other guys, and the intraday moves are driven by them. So if you see Apple sell off a point, the S&P handles will dip down like 10 handles, and it's rather annoying, especially if you're a day trader, to be stopped out on something like that because there was news on Apple and you're not even in Apple, you're in something else. So I can see why it's an annoying dynamic in the marketplace that upsets people, but in reality, there's tons of stocks going up, and just because yours aren't, it's like, well, get in the right ones. So I would suggest to them, buy these pullbacks that we've talked about, and you should be all right.
Okay. Now, is there any time, maybe other than on Nvidia, which is hitting your greedy man levels, where you've been surprised at a stock that has managed to hit your greedy man type levels?
I think we talked about one of the ones that really impressed me was the super micro. I really that blew me away how high it went without significant pullback. I know you love this one, and I like this one a lot. Is the Vertiv Holdings. This is one that if you just look at this chart, there's been absolutely no retracement, which shows its strength, but also kind of scares me, right? Because if it does start to break down, we have a long way to go. So just short term, I've had these kind of targets. We hit these first targets at 105. Looked like it double topped, but now it hit new highs today, and it's like, okay, is it going to 120? Greedy man up at 145. This thing could definitely bust. And I would be concerned if this green line, if you follow the 21-day moving average, I'd be concerned if that would break. I'd see maybe perhaps we get some liquidation down. But for now, it looks great. But look at this chart. There's been no, I can go all the way back here. There's been no retracement. So let's just say today was the highest. Let me take these other lines off. So today's high was like 109. I think we hit higher than that today, didn't we? Didn't we hit 111 or something? Or maybe we sold off today. But let's just say it was 109. Look where the buy is. Way down here, 64, 54, 200-day moving average right in between. So the potential down kind of makes me nervous to stop. But, they showed you those other upside targets. There is some potential up. So I think the important thing is use these targets as a guide, but use stops in a stock like this, because when we do get the liquidation down, it's pretty big because there's been no retracement in this one for about a year.
Yeah, this is a tough one. I own it in the value investor portfolio as well as my own personal portfolio now. But value investor bought it almost a year ago, I think. And I do tell new subscribers, like, try to get it on any pullbacks. But the pullbacks have been like 5 points, 8 points. That's it. Like nothing bigger than not even 10. I don't think it's even pulled back $10.
Yeah. Well,
so
the best pullback was the one right after earnings, because they sold it after earnings and then they bought it the next day. So that was your chance. If you didn't buy it, you missed it.
Right. It's been very slim pickings on actual pullbacks, but the valuation is a little more stretched now. So I do anticipate maybe it's slowing. I don't know. But I am interested. It's nice that you put this up so I could kind of take a look at and see what the downside is looking like here, and also your greedy man side.
Greedy man targets. I'm always amazed when they hit.
Lots of greed in this one.
I'm always amazed when they hit, but they do for hot stocks like this one, Nvidia, Supermicro, especially if they're newer names with not a lot of liquidity. This is what I call a thin stock. So if you want to buy 1 million shares of this, you might have to chase it up, and that's what drives the stock up so quickly. Is it's hard to get that kind of size in a thinly traded stock like this or super micro.
Yeah, that's something good to keep in mind. Okay, this was good. This was interesting to see, how much might be left in the tank, where the downside could be, and to keep, kind of these levels out there if you are looking for an opportunity to get into some of these stocks that have just been running. And I like to keep, an option open for where I could maybe accumulate some more shares or start a new position in some of these really great companies that are out there. So let me recap the stock tickers we talked about. There was, of course, Costco, ticker COST. And I have a feeling people buy that stock no matter what. It's kind of got the cult following, but still breaking out to new highs there. Chipotle, ticker CMG, about to split its shares, so keep that in mind. Nvidia, NVDA, we're all talking about that one. Super Microcomputer is S as in Sam, M as in Mary, C as in cat, I, SMCI. Alphabet is GOOGL. And then we briefly talked about Vertiv there at the end. That's also an AI play on the data center side. And its ticker V as in Victor, R as in Robert, T. VRT. And as always, be sure to subscribe so you get all of our podcasts here at Zacks. We're on Apple with the Market Edge. We're on SoundCloud. We're on Spotify, Amazon Music, just about anywhere you can get podcasts. And be sure to get that video podcast on YouTube. Just go to Zacks.com/YouTube or put in Zacks Investment Research into the search button, and you will find this podcast in the video form there as well. And as always, I'll be back next week with some more stocks.